Oh, everything's sorted now, Tori. It's all good. Thanks for checking in. Sarah, feeling good. Glad I don't feel any pressure to trade today. Great. Yeah, no need to put any risk on today. NFP conditions best to be done by AM session on Wednesday, so we can just enjoy the rest of the tape week, or enjoy the rest of the week tape reading, following the price action, and you get a feel for how things go in the NFP week. Josh, good today. No trading for me until next week. Going to discipline myself to not trade at NFP week. Perfect. Okay, ES continuing to work higher. This that I have marked out here is the wick from the daily chart. So we're trading into the wick now, and you have consequent encroachment here at 51.50, and then buy side above. So this is still our objective here for ES, 51.57 3/4. Let's see if we have any inefficiency below 30-minute here. 15, 5. Okay, ES or NASDAQ working up through the buy side there. This is the balanced price range from the daily. So viewing this as consequent encroachment. If we're going to continue working higher, I want to see closure through the consequent encroachment here. But we will let the morning develop a bit here. We do have news at 10 and 10:30. Powell speaking at 10, natural gas report at 10:30. But we're just tape reading today. So buy side run out there, those were the Tuesday London highs, which NASDAQ has gone and purged right there. NASDAQ is a bit further away from the buy side target than ES. We're only about 17 handles away from it on ES here. Let's see if we can run these lows right here and come back into some sort of inefficiency or back toward the 830 open. I'd be curious if we can run back under these lows. We are working in that 5-minute BISI here. ES also has some relative equal lows here above that 830 opening price. See if we can gravitate back down there initially. If not, then we can just continue working up into a premium. But I'd like to see some sort of retracement here first. Carson, good morning. Stuart, good morning. Really just observing the first 30 minutes here until Powell speaks at 10. That's when we could see some volatility injection. Either to take it back down toward the 8:30 open or run it up toward the buy side. The buy side is the higher time frame objective. We are operating with a bullish mindset, but it would be good to see a retracement first because it allows another opportunity for accumulation. So seeing price drop is not a good thing. It's not a bad thing. It's exactly what we want to see. Dropping back below the 8:30 open, running out sell side, that's a perfect opportunity to present new conditions to be a buyer and take it back up higher. So we wait for some sort of manipulation move. This is a 4-hour SIBI that NASDAQ can reach into next, and you have that daily balance price range consequent encroachment here. And we're trading inside the larger daily BISI. So the high end is also a point to be referenced. All right. Closure above it right there. This is just a 1-minute chart, so from a higher time frame perspective, that's really where you want to reference this. But just looking at a 1-minute chart, we can see that we have closure above, and we can now reach up into the 4-hour SIBI here. ES continuing to gravitate higher as well. It's just trading from this 5-minute BISI here, dropping down into bullish order block, and continuing to trade through the buy side. So we're just reaching for up here. And this is the consequent encroachment of that daily wick. So if this was a day where we would want to be trading, this can provide the buying opportunity here ahead of the 9:30 open, or better yet, down here, a buy at the 8:30, below 8:30, and then taking it up into consequent encroachment of the wick and buy side here. But again, today is not a day where we're looking to trade, just to observe. Okay, there you go. So trading into the 4-hour SIBI there. And I believe there's another one as well. Yes, there is. Here. So if we cut through this inefficiency, we can reach up toward here at 18,252. And then we've got buy side above up here. So let's see. ES may actually be able to reach for that buy side liquidity today. We'll see if NASDAQ can do the same. That would open up some interesting possibilities for NFP Friday. Because if the buy side's already purged, then NFP could just send it ripping way higher. Or it could take it back down into the range toward the relative equal lows that have been established down here after running the buy side. See those here and here. Okay, so far just hitting the consequent encroachment of that 4-hour SIBI. That's where we've made the high at the moment. So far respecting it. What's up, Josh? I see you in here. JM. We having a good morning. Okay, NASDAQ coming off a bit now. Want to see if it can gravitate back down toward the 830 opening price down here. You got these relative equal lows. And you have lows here. Just watching for these lows. .30-minute BISI down there as well. Small inefficiency there. You can see how we respected the consequent encroachment of that 4-hour SIBI really nicely. We've started to create new displacement off of it here, and we're utilizing those areas to trade back lower. We're at a premium relative to the 830 open, and so if we're going to have a retracement before going higher, we can gravitate back toward sell side liquidity, being these relative equal lows, and the 830 opening price. That's why this area has my interest. Same thing for ES. So we reached up into the daily wick, being that rejection block, and now we have relative equal lows down here and the 830 opening price. Okay, there you go. So pretty clean shorting opportunity in here, but again, just looking to observe today. But this would be like your classic reversal up in here. So we're trading into a premium of the range. We're hitting that 4-hour consequent encroachment, and then we're trading through discount arrays here and here, closing through them, and in doing so, we're creating new SIBIs there and there. So when price returns into them, you can enter short, stop above the high, and you take it back down to here, which makes sense in terms of a target because you have relative equal lows. Anyone who's entered this long has been induced long this morning, so there's sell side liquidity built up under the lows, and you're returning to the 8:30 opening price as an area where new long positions can be accumulated. Okay, now we want to see what happens now that we've traded back below 8:30 open. Can we make an effort to go back up into a premium? So we'll want to see if premium arrays are being traded and closed through, and if we're creating new BISIs in the process. ES just in that SIBI right here. So you have an SMT in a sense here on NASDAQ and ES, higher low, lower low. But if we are going to make another dive lower here, then ES still has these lows in the 8:30 open to reach for. So we want to be cautious initially, just waiting to see if premium arrays can be traded through and create new discount arrays in the process. Again, nothing here is a trade idea. We're viewing this in terms of how we could be a participant on a typical week, but considering that it's NFP and the day of the week that we're trading right now, or that we're looking at it, we just want to be observing and tape reading. So just take it as a learning opportunity. Ashok, when you say premium in the range, which range are we talking about? The daily. From the swing high down to the swing low. Or 4-hour. Either way. We traded above the buy side, so we're operating at a premium. And we're in a premium of this dealing range. Okay, so dropping back down to the weekly order block. Okay, you're in a 5-minute SIBI now. Here. Let's see what we got on ES as well. SIBI there. Okay, so far you can see how the 830 open is providing those best buying opportunities. So if we're going to rally back up to the buy side right now, look where the longs are accumulated at. We drop back below sell side to offer order pairing. So anyone who's stopping out here in the form of a sell stop is a willing seller to buy from under the 830 open to go higher back to the buy side. So I'd expect that this 5-minute SIBI gets run through and we reach up toward the buy side. So ES can continue gravitating for this high and for the consequent encroachment of the daily dealing range, and then for buy side up here. There you go. You see it getting closed through there. And we can reach back up toward the buy side here in that 4-hour SIBI and then up toward here. Okay, so let's see ES reaching back up toward the buy side. I want to see NASDAQ gravitate up there as well. Closed above the 5-minute SIBI right there. Tapping back into the high. So we want to see now if we're showing candle bodies respecting this inefficiency from the consequent encroachment and up. See NASDAQ drop down into that 30-minute BISI that we talked about there, below 8:30 open, and back to the weekly order block high. Got a 3-minute BISI right there. And we're about to have Powell come on in 30 seconds. So I'd like to see price continue reaching for the buy side up here, now that we've already gone back below 8:30 open. Should have a 5-minute BISI as well right here. Ismail, good morning. Danny, good morning. Oh, Danny, welcome in. Good to see you in here. Okay, coming back into that 5-minute BISI on NASDAQ here and on ES. And I'd like to see price reach down in there and then continue gravitating up toward the buy side. So as you drop down into a 1-minute chart, you want to watch candle closure when we run out the sell side here and see where our candle's closing. So far, you see we ran through the low into the 5-minute BISI, which you can see on your 5-minute chart here. And look at the candle closure. So let's see in 9 seconds, do we close above this low? Good. That's a bullish signature, and we can continue working higher up toward the buy side. So you want to watch the next candles as well and see that we continue to close above lows that are run out. So it's a good closure there on ES after reaching into the 5-minute BISI. We can keep reaching up toward the buy side here. And NASDAQ can reach up to this high, and then above this 4-hour SIBI right here into this SIBI, also from the 4-hour. Let's see if this can offer the 30-second model here. So you had a run on stops, you have your draw up here, you're trading higher, you're creating the 30-minute BISI. So this could give the entry to reach for your 10 handles. We'll see if it reaches. Again, it's not a trade idea. We're just looking at observing price action on a day like this. Within this range, I would rather not trade it with this tight of a stop. Instead, I would trade it with my stop just below here, and I'd reach for the buy side, and I would just size the position to allow for that. Okay, and it's still in the 5-minute BISI, so if this opportunity were to be stopped out, it wouldn't change the bullish framework here. We would still just wait and see if the model were to form again, and then it could be mitigated. Okay, so that would be a stop out on it there, and then we would just wait and see, do we continue to respect it, and we can find the same approach to reach for the buy side on the next opportunity. This is a good example too, because it kind of helps you identify why on a day like the Thursday leading up into NFP, you could see action that's a little bit more challenging to trade within. And it's good to not be a participant on these kind of days. But we'll see if this develops again here. So just waiting for an up close candle, and it would provide the same model. You can see when sell side was run out, candles still closing above it. So it's still that same bullish framework. This could already be a buy just based on the 5-minute, buying anywhere in here with a stop below the candle that created the fair value gap, and you're reaching for the buy side here and then up to the 4-hour. So 9 seconds here. And I'll drop to a 30-second chart. Okay. So you have an inefficiency there. It didn't quite reach into it, but we'll see if we can get that. So this is going to be your bullish breaker. You can accumulate inside that range. You could even look to be a buyer here on the immediate rebalance with the stop under the low and target the same high. So up here, and then reaching for the buy side, or the 4-hour CIVI above there. So we'll look at that as the first target. Trading to the last down close candle right there. I'd like to see it start moving higher off of this. utilizing that 1 minute bullish order block there. And we'll see it expand up toward the buy side above. I'm going to take that off. And we're looking for this high to trade. Okay, there's ES reaching through the buy side as we expected there. Very nice. So depending on how you see it, either inversion CIVI or just entering in the BISI there, stop below the candle that created the inefficiency, and you reach up toward the buy side. And same idea on NASDAQ on the 5 minute here. Closing above the CIVI, and we're creating a BISI. You can enter in it right there. We just hit the consequent encroachment, and then trade higher up toward the buy side. So your first target can be buy side liquidity here. Your next would be the 4 hour CIVI above there. And then beyond that, you can hold runners up toward the buy side up here. So if you had, again, we're not trading on this day, but we're just looking at how we could tape read as if it were normal price action. If you were to have a larger position on, you could hold runners for the buy side up here if we're going to have a large range day. But another thing you can do as well is take your fib and just quarter the range, which is something I like to do for taking partials sometimes. So you take your first target, buy side here, and the one that we're reaching for, which is all the way up here. And then I'll just put on my fib and break it down like that. So if I were looking for other areas to take partials at, I could do so here, 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 and then here. Ranjan, was the real play buying below 8:30 opening price or shorting to the 8:30 opening price? Scalp is ideal for today. Both offer opportunities, both directions. I'd say you have to be a little bit more nimble for the shorting opportunity, but you can take it both ways. Okay, little 2 minute BISI right there, which we just traded back down into. And so we'll want to see it continue expanding up into the buy side now. And ES reached right to the consequent encroachment of the wick, right there. So we'll want to see closure back through that if we're going to continue working up toward the buy side. Perfect. So that would be your first target met. And though we're not trading, we're viewing it in terms of the price action that we're seeing. So if we took that first 30-second model and took a loss on it, we can easily mitigate the loss with this trade and return back into profit. So that's perfect. It's a good example of how to take a loss and then be able to mitigate it afterward. We didn't change the bias. We didn't change what we were looking for in terms of the draw. We just identify that order flow is still on our side and it was a premature stop out. And then we can find a new way to enter and take it back toward the buy side. So that would be your first target met right there. Now we would want to look within this price range here and identify any new inefficiency that's formed in that. So I would start with, let's go to a 30-minute chart. There's no inefficiency in here. 15, nothing. 5 minute, Nothing really yet, but there is inefficiency forming right there. 4, nothing, 3, nothing, 2. Okay, so we still have this BISI here, which could be reclaimed and still trade higher. So if I were to trail my stop up at this point, I wouldn't trail it anywhere higher than the low of this candle that created that inefficiency. Okay, so I can trail it to there and reduce my stop, but not go to break even quite yet. It's trading in that BISI right there and inside the breaker here as well. The last up close candle in there. So we'll see if this can resume and continue working a bit higher. Here just traded right up into the high end of that daily SIBI in the balanced price range. You can see right here from the daily. Just to the high end of that SIBI here from the daily. And it's the high of that 4-hour SIBI as well. Okay, ES finding some closure above consequent encroachment right there. Let's look on 5-minute chart as well. So we have 1 minute left, and then we'll have a BISI here on ES and here on NASDAQ, assuming it doesn't get closed in here in the next 1 minute. Okay, 5 seconds. All right, so there's a 5-minute BISI below now on both ES and NASDAQ, being this green shaded area here and here. And I just want to see if we can continue bullish order flow. So seeing NASDAQ work back up through this high and toward the SIBI up here, which would be the second target on this opportunity. Any questions so far from this morning? Eyes in the Mirror, good morning. Lil Dolba, Joba, good morning. Mark in Texas, good morning. So normally these streams are the streams that we do after the pre-market morning chart and chat, and we do this inside Carson and I's trading rooms on the other side of the Discord. Just decided to do one here in the live events tab this morning and let everybody have a look into what we do on the other side of things. So we do these streams almost every day, Monday through Friday, kind of just walking you through price action and order flow. Okay, and we've got some news at 10:30 as well, which is the natural gas report. So not a crazy mover, but it could take us up a little bit higher into the range. Coming back down to that 5-minute BISI there. Here on NASDAQ, here on ES. I'm going to go ahead and take this off as well. So that idea there, we could have already booked a partial at the buy side and reduced the stop loss to just under here. And we'll see if we can continue up to the next target, which would be here, the 4-hour SIBI above. Brando, good stuff. Just need to keep hearing your commentary more. It helps me understand price action. Need to get my head better around translating that into going long or short for an entry. Yeah, and remember, the focus of things is just put your greatest focus on the draw on liquidity and identifying the order flow. The entry is the least important part, because we could identify that 5-minute BISI in here, and whether you buy here, 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 there, or there, as long as you have appropriate stop placement that allows for order flow to continue, you can have a profitable trade. So the entry is the least important part. Most important is identifying the draw and identifying clear order flow, and then you can find a way to be a participant. Okay, so now I want to see NASDAQ continue reaching up to the buy side here. You can see that we dropped down right there, just one tick into that BISI, which is from the 5-minute. So you can see how we reference that inefficiency right there. Very nice. And we can continue working up toward the buy side. And in doing so, as we drop down to that SIBI, we don't even create any new inefficiency to the downside. So that's another good indication that we can continue trading higher up toward the buy side here, above this high, and then up toward this 4-hour SIBI. And we've got a little bit of news at 10:30. Let me see, I had another question too. Eyes in the Mirror. Could you please tell when to expect retracement in the dealing range and when not to? Typically, the way I look for, there's some more details around it in terms of like specifics on when you should expect a breakaway gap or for price not to return into inefficiency. But typically, all I look for is after some sort of high or low has been run. Like in this case, we traded up into the high. I go into my higher time frames. So I would start higher normally. I'd go like to 1 hour, for intraday, and then I drop down to a 30-minute, 15-minute, 5-minute, and all I'm looking for is have any new BISIs or new inefficiency formed in the range. And so here, after that high was run right there, I go to my chart and scroll down through my hourly, 30-minute, 15-minute, 5-minute, 4, 3, 2, 1, etc., and identify inefficiency in here. And so here we could see one on the 5-minute, and if we've already traded through the buy side and we have new inefficiency below, then within this range, since it's all fractals, so if you're looking at these candles here on a 1-minute basis, you could expect for the next series of 1-minute candles to draw back into that inefficiency. And then as long as we're going to continue bullish order flow, you want to see that inefficiency respected, which means that on a 5-minute basis, you're seeing candles closing in or above that inefficiency. And if so, we can continue gravitating higher, back toward inefficiency and liquidity above the market. So you have buy side here, and then you have that 4-hour SIBI above, up here. Okay, so buy side run out right there, and I'd like to see this just continue working higher into 1030. Okay, so we're already trading to that upper end of the daily SIBI. ES has gone and closed above the consequent encroachment of the daily wick, which is from here. So that's the midpoint of the wick, and so we can continue reaching up toward the buy side up here on ES, which is here on your 1-minute chart. Let's see, no inefficiency below. We do just have a small volume imbalance here on the 15-minute. So we could see the next 15-minute candle draw back into that volume imbalance, but ideally we just continue expanding higher. Okay, and there's your 10:30 news release. We did trade and close above this 4-hour SIBI. It's just on a 1-minute chart though, so you still want to watch from your 4-hour basis and see how we're respecting it. But I'd like to see us go and trade through it and reach up toward this SIBI above. Again, on the 15-minute, you do have that volume imbalance there, and you have an area of inefficiency, so you can see this trade back down to the 10 o'clock candles high. So we're just on a 15-minute chart here, watching to see if we can trade into that 10 a.m. candle's high, and then identifying the little volume imbalance in there. So that's a small area of inefficiency we can return to, and then continue working higher from. Ranjan, if the 5-minute BISI has a huge stop loss, how to manage position accordingly? Yep, exactly like Kate says. You just take smaller size on it. So you can always adjust to whatever size stop loss just by changing your position size. Remember, it should always be what is the stop loss before what do I want my position size to be. So we're not choosing the stop loss based on our position size, we're choosing the position size based on our stop loss. Take care, Leslie. Florine, how do you see the 4-hour BISI form today? Let's see. So this BISI down here, I would initially look at as a breakaway gap if we're going to continue trading up toward the buy side, because it's also down below the midpoint of this candle's wick, which I would want to see price hold in terms of a mitigation block and trade higher. This inefficiency could trade into, but I would ideally like to see price just continue expanding higher with ES having the buy side right up here. It would make more sense to just continue expanding toward the buy side than making a deep retracement at this time. But you do want to be aware of that on your charts. If you start seeing on lower time frames, like your hourly, 30-minute, 15-minute chart within this, if you're seeing PD arrays being violated and price trading and closing through the midpoints of them, then you can gravitate back down into this area from your 4-hour. At the moment, I'd still be expecting higher prices because we're not seeing anything but bullish order flow. Yeah, continue higher for ES to reach up toward this high. And I want to see NASDAQ here as well reach up toward the next 4-hour CIBI. So back above this high and up toward here. This is from the 4-hour chart as well. You can see the separation between that candle's low and that candle's high. That's a CIBI. Sell side imbalance, buy side inefficiency. And here, right there, we're closing through this CIBI that was created after trading up above these highs. So that's good, another bullish signal. We can continue trading higher toward the buy side here. And right now, we're just consolidating inside the range of the 4-hour fair value gap. Okay, now we're just working inside the range of the breaker here. So if I go to a 5-minute chart, you can view this up close candle here as your bullish breaker. So we have a low, a high, a lower low. And all of this price action is just accumulating more long positions inside the breaker, the up close candle right here. And we can continue trading higher as long as we continue to show bullish order flow. So we're just watching for discount arrays to be respected and for price to continue trading higher off of them. Okay, so we'll see if NASDAQ can reach back up into this high and this high here and toward the 4-hour CIBI above. Anyone have any questions so far? Okay, there you go, reaching up into that high right there, and just see it continue to reach up toward this inefficiency from the 4-hour. So it can reach to 18,252 next. Okay. So Ranjan, I will show regarding this morning. We talked about, is it better to take the trade back down into the 8:30 opens or back up with the order flow? Well, you can do both sides of it. So this is all paper trading here. But looking at the play that we talked about this morning from the 30-second. So we ran up above the buy side into a premium this morning. We're talking about how we can draw back to the 8:30 open, which was this blue line here. Okay, and under the relative equal lows. So this morning move was inducement to get more people in long, which does what? It builds liquidity under the lows, because as more people enter in long, they're protecting themselves with a stop loss in the form of a sell stop. So you have sell stops under these relative equal lows and under these lows. Why are these lows more important than these ones? Well, because these are in confluence with the 8:30 opening price. And the 8:30 opening price is just like how we use the midnight opening price in terms of the daily candle. 8:30 open is the opening price of the New York AM session candle. So if you're viewing everything in terms of open, low, high, and close, everything below the 8:30 opening price is like dropping below and forming the wick, the lower wick of that AM session candle. And so when we're bullish and expecting higher prices, the best buying opportunities are going to come at and below the 8:30 opening price. And so we can take price back down to that price as a specific point of reference where we're expecting it to draw toward, and then we could take it back in the other direction. But generally speaking, you want to trade with the higher time frame bias, and so your best opportunity here would not be the short, but rather the long opportunity. But I will show you just how I took it here. So 30-second chart. Oh, I'll look at the 4-hour as well, so you can see where this first high was made. So 4-hour CIBI right there. Price trades into it, and price trades into it. Why is it not dropping? Oh, there it is. That's the 4-hour CIBI. We trade into it and perfectly respect consequent encroachment. Candle bodies are not even closing inside the inefficiency. You could trade it here on a 1-minute chart inside this CIBI right there, or that one if you got a really early entry. But I traded it on a 30-second. So here, price runs up into this inefficiency. I took an early entry here inside this CIBI with my stop above here. allowing for this inefficiency to trade, which was on the slightly higher time frame, the 1 minute. We trade up into it right there and then drop lower, and my pyramid entry right here comes right as we trade back up into the up close candle. So we already reached into the inefficiency and we're drawing lower. Now I'm expecting this to be treated as a bearish order block. So I take my pyramid entry right there, first entry in the 30-second SIBI right there, and then I take profit down here below the 830 open and below sell side liquidity, those equal lows. So that's where my take profit is. Okay, and then we start to trade higher to offer the buying opportunity. Now that we're back below the 830 opening price and we can reach higher back up into the buy side up here. So this is still our draw on liquidity, and I don't have the other one marked, but still buy side above here in the 18,370 area above all-time highs. Okay, so we're still expecting price to draw up there. We drop back below the 830 opening price. Now all we want to see is, do we start to trade through premium arrays? So if I look at a 1 minute, here's a premium array, being this SIBI and this SIBI here as well. So I want to see closure through those. If you were to take a really early entry, you could be buying down in here just for the fact that it's below the 830 open, and you could buy it right there at the 830 opening price. I didn't get that entry. That would have been a really good entry right there, but I didn't get that one myself. Instead, I waited and saw price trade through the SIBI here, and it closed above. And we're now closing back above the range of this down close candle as well, which would be treated as your bearish breaker if price was going to continue working lower. But we're closing above it, and so on the very next candle, again on my 30-second chart, right as price opens and drops down a little bit, I hit market order right there to enter, initially with my stop loss back below the 830 opening price. Okay, and then as price traded down here on the 30-second again into that little BISI, that's where I take my pyramid entry, because we were moving quickly here and I wanted to allow for, if price was going to run fast into the buy side, I wanted to get my entries in. But my stop loss after doing that remains down here under this inefficiency, okay, because I'm allowing for price to return back into this range. And then I'm just watching and seeing what happens as price trades. And as I go into a 5-minute chart, you can see that we created a 5-minute BISI right there. And so as I drop down, my stop needs to allow for that range to trade. And so I'm okay down here because price can trade back into this. It comes back lower than my entries, but I'm not concerned with it because I'm watching how price is just trading into the 5-minute BISI. And when it runs the stop losses, look where the candles close. It runs under the low, but the candle closes above that low. Here, it runs under the low, but the candle closes above that low. That's a bullish signature each time that's happening, and it's showing that we can continue bullish order flow. So I'm just entering with the understanding of order flow. This is another reason as to why the entry is the least important part. Whether I bought this candle, this candle, this candle, this one, whatever, it went here because the draw on liquidity is the most important. And so no matter how you're getting in, the most important understanding is where is it going to go to and where is it not going to go to. Well, it's already gone back below the 830 open, and I'm expecting it to draw here. So as long as I'm entering and putting my stop in a place that allows for price to utilize inefficiencies and PRAs being created along the way, then I'm safe in the trade and it can continue trading up to the buy side, up here and above. So I take my entries there and then my exits were right here. Just as we trade up into that 4-hour SIBI. I took them off just a little bit early right there. So you can do it both ways. You can look to take the short down into the 830, or you can just wait and take the long trade as well. Eyes in the mirror, I looked at your trading view. I don't know if you have an explanation for what you want me to look at there. No, I'm not concerned with the dealing range. David, I'll get to your question in just a second. I'm not concerned with the dealing range there. What I'm looking at is, well, a couple things. If you're looking at that as your dealing range, you're in a premium. But I'm not expecting price to draw all the way back down here because it's already done the damage and below sell side liquidity, running out the previous day's low, and it's manipulated below the midnight opening price, which is this gray line right there. So I'm not expecting it to come all the way back down here. What you can look at as well is what's called your implied dealing range. So you're drawing it from where price has been to where you expect it to go. So I'm expecting this low to hold down here and for buy side to trade up here, which means if I take my fib and put it on that low and take it up to the high there, then considering my implied dealing range, this is all a premium and this is all a discount. Okay, or I'll even do it from the low that ran out the sell side down there. So this is all a discount and this is all a premium of the implied dealing range. Okay, so this is technically still within a discount, and considering this as the implied dealing range, if I'm expecting price to draw up toward the buy side up here, then as it trades down here, it's trading inside discount arrays, being the down close candle and this series of up close candles here, which is your bullish breaker. That's all happening right there, where I'm initially exiting my position and then looking to turn around and be a buyer to take it the other way. Okay, and now we're trading nicely higher up into this SIBI right here, and we can continue gravitating higher if we're going to have a nice large range day and reach toward the relative equal highs up here and buy side above right there. David, what was your rationale for the entry at 18,130? 18,130. That 30-second entry? I'm assuming that's what you're referring to. Yeah. So the rationale is just that it's an earlier entry, but if you're basing it off the understanding that price is just dropping below the 830 open to go higher, and that was the understanding from today. We talked about it at the beginning of the session. We were talking about we want to see price go higher, but first it would make sense for a retracement first because it's coming back down to allow more opportunity for accumulation. And so it's not coming down here below the sell side to go way back down here. It's just coming down there to allow another opportunity to accumulate positions below the 830 opening price for that AM session candle to expand higher. And so right when price drops below these sell stops, that would be a turtle soup idea to just be buying those sell stops. So you could immediately be a buyer right when price is dropping through those lows. But I don't like to buy on that right away because I want to see that we're getting a continuation of bullish order flow and that this isn't just a reversal off the highs on Thursday. So I wait for premium arrays to be trading through first. And if you're an early buyer, we don't have it closing through any 1-minute arrays yet, but if you're looking at a 30-minute or a 30-second chart, here is your first SIBI, your first premium array right there. And right there we close above it, and in doing so we create a small BISI right there. So we're showing that continuation of bullish order flow, okay? And then we trade higher and close back above the 830 opening price and above more premium arrays. So if I want to be a buyer, the best buying opportunities are going to come at or below the 830 opening price. You don't have to be a buyer there in order to have a profitable trade. Like I didn't buy this, I bought it here and here instead. But the best buying opportunities on a bullish AM session are going to be at or below the 830 opening price. And so right there, that provides the next best entry. Your best, of course, would be if you bought it just straight as a turtle soup entry and you had to buy somewhere down in here. Okay, but that comes with a little bit more risk on the trade in terms of where your stop loss placement needs to be. Because now if I buy it here instead, I have an established low that I can frame my risk under. So I can be a buyer right there at the 8:30 opening price, put my stop under the low, assuming that this has done the damage trading below the sell side liquidity and it shouldn't need to trade back down here. And then I can target these highs and I can target the 4-hour CIBI, which was at 52 right there. So you can take it just like that. And if you didn't get this entry and you didn't enter in here, then what do? You wait for the 5-minute, and you can see that we have a BISI that formed in here where price trades back into after we closed above the CIBI from here. And if we're going to continue bullish order flow, you want to see respect for discount arrays. And so you can just enter there when price trades below that low with your stop below here. Same targets. 52 it was right there. So that's another trading opportunity off the 5-minute chart. Alan, higher targets can be, you can reach up toward the, on a daily basis, well, you have the volume imbalance here that we already reached into. That's why I was interested in taking partials where I did here. You can see that I took partials right inside the volume imbalance. Or that's where I took my full exit actually, is right there in the volume imbalance. Okay. And then you have the wicks up here as well that you can reach for. And then on a 4-hour basis, we already traded into this CIBI. And so if we are to trade and close back above that, then you have buy side here and here. Any questions? Any questions, y'all? We've got some lawn work going on outside my place now, so I'm probably going to close up this stream in the next 5 minutes or so. But if you have any questions, feel free to ask them. I'm happy to go through them and give you an answer. Thanks, Douglas. I appreciate it. I hope you learned something here. David, no, I'm not interested in continuing to watch today. Again, just like we talked about today, it's NFP week, so generally speaking, you want to be done with your trading by Wednesday AM session. The trades that I showed here are paper trades, so there's no real risk, and you know, the rest of the week is really meant for just tape reading and observing. So you can watch and you know, just continue to learn something from the price action today. But I wouldn't in any sense recommend putting any sort of real risk on, because we're heading into NFP. We've already had a decent move in the AM session as well, which means unless we're going to continue expanding through the PM session, we could switch into consolidative or seek and destroy conditions leading into the news tomorrow morning. And so I would just want to be cautious the remainder of the day. Eyes in the mirror, I'm definitely joining the group. Need to work on premium discount, understanding more. Live stream's really insightful. Awesome. Well, we look forward to having you in there. And y'all, anyone else who's just watching this morning, I did the stream in live events today, but normally Carson and I do these streams in our trading rooms in the morning between Monday and Friday. These are the streams that we do after the morning chart and chats. Whenever those close, then we go into live streams on the membership side of things and walk you through price action exactly like this. So showing you where the trading opportunities are, but more so than just giving you trading ideas, it's designed with the intention of teaching you to be independent. So we're showing you what to look for so that you can do it on your own. Because that should be everyone's goal in the markets, not to follow somebody else, but to be able to do this independently and take your own earnings out of the market through your own decisions and understanding. Florine, where would you see it retrace in order to go to Monday's high? Sure thing, Danny. I'm glad you could join this morning. Retrace in order to go to Monday's high. Well, if we continue expanding on this 4-hour candle, then the next candle could open with inefficiency in here. So you'll want to look for what inefficiency exists within this range. If in the next 3 hours this 4-hour candle closes back under the prior candle's high, then there's inefficiency in here that can be returned to. So you're just watching those higher time frame inefficiencies, Florian. Ooh, I might have to eat something too. My stomach's growling a bit. Any other questions from this morning? You're welcome, Florian. Okay, so I'll show the 30-second trades that we were looking at initially as well. So both the one that would have been stopped out and the one that could mitigate and take you back into profit. So this was the initial idea here. We were still looking to draw higher. On a 5-minute basis, we trade back into the 5-minute BISI here. So returning into a discount array. We drop below sell side into the discount array and have a candle close higher. So I drop down into the 30-second chart and look to target these highs and these highs. Okay. 30-second, we form a BISI right there. So the entry is in there and you're looking to target the highs. And the stop was originally under the low. So that initial trade would be stopped out right here. It's a premature exit in the sense that price is still inside the 5-minute BISI. And so I'm taking the opportunity with the approach that the trade could be stopped out. And so you want to be sure you're position sizing and using appropriate risk management so that you're not, you don't want to be like blowing up an account over a single trade. And when we talk about risk management, you always need to be risking an amount that's giving you opportunity to be profitable over a series of trades, not a single one. And so when I look to take my trades personally, I'm always sizing positions at no more than 1 to 2% risk of the account. And even better is to size smaller than that, at 0.5% or 1%. Okay? So you can take that trade like that. Initially, that one would be stopped out, but we're not shaken from the bias because we're still showing signs that we're going to trade up toward the buy side. So when the trade is stopped out, stops are run right there, but see how price just closes back above the sell side. So we look for the same exact idea to reach back up to buy side. So we traded up again, created another 30-second fair value gap. We created a down close candle and traded away from it here, which is why the second entry I took was not expecting this to be traded into, because that's all the way back down here in a discount. We've already traded through this premium array and created a new discount array. So I'm just entering using the immediate rebalance right there at the high of the down close candle. Still stop goes under the low, and we target the same high initially. So target there, and then the next high would have been that 52 target at the 4-hour BISI, or SIBI, excuse me, and then you could also go and target the high end of it as well. And all of those targets were reached throughout here before the retracement. So you can see how even with taking a loss on the first trade, you can mitigate that loss still using appropriate risk management, okay, and find an opportunity where you can recover the losses and return back into profit. Because even on this loss right here, when you take your first partial up here, you can already have that loss mitigated, and then the next partials can pay you and put you back into profit on the trade. So this trade would have been managed like this. Entry here, first take profit right there, and then after that take profit is reached, I'm scrolling back through my higher time frames and seeing where the inefficiencies are. There's still inefficiency. Let me take this off, or let me make this like that a second. There's still inefficiency in here that hasn't been traded to yet. So if I want to trail my stop up after taking a partial right there and start protecting myself on the position, I can't go to break even quite yet because that may lead to a premature stop. But I can take my stop and trail it up to under this candle's low, which is the candle that created the fair value gap right here. And then when you go and trade to the next target up here, then you take another partial, and at that point you can be break even on the trade. And then what you want to do now that it's traded here, if you want to continue looking for higher targets, then you need to go back through your higher time frames again. So you need to look at a 1 hour chart. Okay, there's inefficiency in here. So if you jam your stop loss up to here now, you can be stopped out prematurely before it goes higher. So you can't jam your stop all the way up in there. You need to allow for this to trade. Then go down to a 30-minute chart. No inefficiency in there. 15-minute, no inefficiency. 5-minute, nothing. Okay. So what I would do now if I wanted to continue allowing it to trade is allow for price to trade down as far as the consequent encroachment or midpoint of this wick right here. So I wouldn't trail my stop anywhere past that. So if I wanted to raise my stop up, I could raise it up a little bit further into profit, but nowhere higher than the consequent encroachment right there. Okay, so I'd probably put my stop at a maximum under this low. There. Okay. And then you can allow the trade to continue. Rosemary, no need to set the 30-second trade target at 10 anymore. Well, the 30-second model itself is designed to capture those 10 handles. And so that's the framework that you want to be following as a beginner when you're learning to utilize that model. But the idea behind it is that to get those 10 handles that we talk about in that model, you're getting those on the path toward a draw on liquidity that you've identified. And so if you have an understanding of order flow and that price should trade to that draw on liquidity, well, there's more than 10 handles of range in that. And so you can reach all the way for the draw on liquidity. But we just talk about the 10 handles as the great place to take your first partial and potentially start protecting yourself on the trade. But you can always reach for more. But remember, the most important thing when you're trading in terms of risk management and trade management is getting the priorities straight in your mind. The priorities are to be profitable, not to be right. Okay, so you can still have a profitable trade between here and here, even if your expectation is that price will trade up to the buy side here. Let's say it doesn't reach there. Let's say it just goes above this high and then turns around and reverses back to the lows. Could you still have a profitable trade? Yes, you could have a trade from here and get your 10 handles and be out of the trade and be profitable. Are you technically right that it traded up to the buy side? Well, no, you'd be incorrect about that. But are you profitable? Yes. So profitability always comes over being right. Being right is just for your ego. Being profitable is for your bank account. Okay, any last questions from today? I'm going to go ahead and close it up here if not. Let me know what you thought of today's stream. I'd love to hear from you, get your feedback. David, thank you so much. Rosemary, thank you. Kate, thank you. David, appreciate you explaining your thought process. You're welcome. You're welcome. Florine, great tape reading. Eyes in the Mirror, thanks for the stream. Stuart, thank you. You're welcome. Okay. Luis, great as always. Very good. Okay, well, I have this stream recording as well, so I will go ahead and get this uploaded to YouTube if you do want to watch it back afterward. And I think that's going to close it up for today. So be safe, be responsible. Remember, the rest of the week should just be used for tape reading, observing the markets, learning a thing or two, but no need to put any sort of risk on. Tomorrow should be a good opportunity to just see some interesting price action. So we'll do another stream tomorrow and watch non-farm payroll. It's not something that you want to be in a trade ahead of, okay? NFP is non-farm payroll, but it's also not for professionals. So professionals don't engage in that kind of price action. It's for gambling, and that is not what we do. We do everything with an understanding of why and where price should go, and we do it with appropriate risk and trade management. And NFP is not the place to do that. So that'll close it up for the week. Be safe, be responsible, enjoy the rest of your day, have some fun heading into the rest of the week, and I will talk to you all soon. Take care, everybody.